Hello my good students, my name is Brenda and I'll be taking you through the principles of taxation, a topic known as administration of income tax. Now we have some definitions to start with, which we are going to learn them today, and we will write them on our boards for us to remember. So we have terms like returns, we have the assessments, we have tax administration in Kenya, we also have KRA. Now we are going to look at each one of them and the roles that they play. So we have the return, we also have the assessment, something called assessment. We also have KRA and tax administration in Kenya. Tax administration. In Kenya. Now we are going to look at each and every term here for us to know what we are dealing with in the income tax, the administration of the income tax. So we have the return, and return is issued by the domestic department for completing annual details of an income. So a return is always issued by the domestic of tax. A return is issued by the domestic taxes. A return is issued by the domestic taxes department for complementing annual details of an income. So a return is always given by our domestic taxes department for us to know where the details of the income are. So we have an assessment. An assessment means the measurement of an income. An assessment is basically the measurement of an income. It can be a business income or an employment income, any income that we get. So we take a certain measure which is given to the government. So we have the assessment, which is the measurement of an income. Measurement, it's basically the measurement of an income. Measurement of an income. We also have the KRA. And our KRA, it is the Kenya Revenue Authority. Kenya Revenue Authority. This is the KRA, which is the department established by the parliament as an act, and its role is to collect the government revenue from the businesses and from the employment income. We also have the tax administration, and tax administration in Kenya is collected by the public revenue in the which is administered by the treasury through various revenues department operating under the KRA. So the department which has the role of collecting the taxes is the one which administers the tax collected. So this administration is the department that collects tax. Department that collects taxes. So my good students, with this in mind, the 4 terms, we are going to continue with our administration of income tax. This is our topic, administration. Of income tax. Administration of income tax. So with the four terms, the return, the assessment, the KRA, and the tax administration in Kenya, we are going to know more about the administration of an income. So we will look at the role of KRA, role of the Kenya Revenue Authority, so the role of KRA is to administer and enforce the written laws. So in Kenya, we always have the Constitution, which has our written laws in it. So the role of the KRA is to administer and make sure that the laws, the written laws, are being administered. They are being adhered to. So point number 2, the role of KRA also is to advise on matters pertaining the collection of revenue. So the KRA basically deals with the collection of revenue from different businesses and different people who get an income. So their role is also to advise on matters pertaining administration and the collection of revenue. We also have another role here, and it enhances efficiency and effectiveness of tax administration. So the role of KRA is to make sure that every taxpayer pays their due tax. So number 4, we have the KRA also. Its role is to eliminate tax evasion. So tax evasion has been a hindrance in the collection of taxes. So the role of KRA is to make sure that every taxpayer does not evade taxes. He pays the taxes in full. So point number 5, we have the KRA also promotes professionalism and eradication of corruption. So we find in most cases that corruption has been part and parcel of the organization, whereby the KRA comes in and prevents the corruption from continuing, especially from the KRA employees. So you may find that a KRA employee might go ahead and be corrupt and make some other businesses not to pay taxes. So the role of KRA too is to make sure that there is eradication of corruption. We also have another role. The KRA ensures that our local industries are protected. So in the imposition of taxes, the tax levied on the local industries, which is the excise duty, the KRA makes sure that it supports its local industries through the KRA, through the taxes. So another point, we have the KRA also facilitates the distribution of income. It facilitates the distribution of income. So when the taxes are collected by the KRA, there is a change of the resources, and there is a change, and the revenue collected is used to build up the resources in Kenya, whereby we have the building of infrastructure and making of the schools and other things pertaining our counties. Now we also have another point, the role of the KRA, which is it makes sure that there is allocation of the scarce resources in the economy. So the KRA also promotes the equality of the share of resources in the economy. So we see those are our roles of the Kenya Revenue Authority, which is a department, which is an organization that usually assists in the collection of revenue in the country. We also have, we are going to learn about the PIN in income tax. In income tax, we are learning about the PIN. The PIN is the personal identification number. Personal identification number. Personal identification number, whereby every taxpayer is supposed to have a personal identification number, and the PIN is usually numbered, and the numbers are not always the same. So every taxpayer has his or her own number, PIN number. So we have places where the PIN is required. First, the PIN is required when we register for KRA, the Kenya Revenue Authority. It's the one which gives us the PIN, which issues a taxpayer with the personal identification number. So we have places where we require our PIN, and that is, the PIN is required when registering a motor vehicle. When you want to buy your motor vehicle, you need to have a PIN. You will need a PIN to register your motor vehicle. You will also need a PIN in applying for imports and export licenses. So the personal identification number is also used in the application of exports and imports licenses. So we also have whereby the PIN is required when we apply for insurance covers. Many insurance covers the organizations, many insurance organizations, they will require your PIN so that they register you in their company or in their organization. We also have the land. When you want to buy your land, you will also need a PIN. You will also need a PIN to get your land. And also in the paying of the bills, you will also require to have a PIN number, personal identification number. That is the bills like the water, the telephone, the electricity connection. You will always require a PIN. Even if your business is running or you are an employee, you also need a PIN so that you may be put in the KRA registers, and so that you will be a taxpayer also. So the purposes of a PIN. What's the purpose of a PIN? Our purpose, the purpose of a PIN. So my good students, we need to know the purpose of a PIN, which is to bring more persons to taxation. So basically the purpose of a PIN, or the personal identification number, is to make sure that many people are paying taxes to the government. So it brings many people to taxation. So it makes you to be a taxpayer in one way or the other. So another purpose of a PIN is to assist in the reduction of tax evasion. So tax evasion it assists in the reduction reduction of tax evasion. And just like we know, the tax evasion is an illegal act of omitting taxes, an illegal tax of not paying taxes to the government. So you as an employee, as a businessman, as a farmer, you need to always pay taxes to the government. Otherwise, tax evasion is a crime here in Kenya. So another purpose, we have to link employee file and the return with the employer returns. So it links the employee and the employer. Let's say there is a return that is supposed to be made in returns, in tax returns. So let's say there is a return that needs to be paid to the KRA. So the employer is the one who sends the tax on behalf of employee to the government. So maybe there is a return that is supposed to be made. So it links the employee and the employer. So the KRA links the employee and the employer, since the employer is the one who pays taxes on behalf of the employee. So we are also going to see what a return is. So we have the KRA and the PIN, the purpose of a PIN. So we are going to see what a return is. So a return, no, we've talked about the return, which is issued by the domestic taxes. So we have returns, we have different types of tax returns. And just like I've said, the tax return is the one which is paid back to the taxpayer. And the returns, we have different types of returns, tax returns have different types of tax returns. And tax returns, we have the installment tax return, we also have the self-assessment tax return, we have the compensating return. So we are going to look at them. We have the installment return. We have the installment tax return. We also have the self-assessment return. We also have the compensating return, compensating return. Compensating return. So we have the installment return. This means the installment tax return, this is tax paid to the government on a bit by bit, which is submitted bit by bit. Like we have on the 4th, the 6th, the 9th, and the 12th month. So every date 20, every 20th, the tax should be paid in the 4th month, in the 6th month, the 9th month, and the 12th month. So this installment tax is supposed to be paid bit by bit every 4th month. Let's say it's on April. Then in June we also pay taxes, June 20th. Then we have September 20th and the December 20th. We are supposed to pay taxes as a business. As a business, you're supposed to pay taxes when you are referring to installment tax return. We also have the self-assessment return. Self-assessment return. This is whereby the taxpayer himself or herself pays the taxes online and submits their tax online by themselves. So that is self-assessment. Taxpayer himself does the work. So the compensating return, that means suppose you paid tax exceeding the taxes you are supposed to pay, or you have a more output tax than the input tax. It leads to let's say you have the more input tax than the output tax, you will always have a tax refundable. So this is tax refunded to you by the KRA. So instead of you to be refunded the tax, it's always compensates to the next